It's time now for the Wall Street Beat. There's an IPO revival, sort of, underway. Just to go to the news, that online broker eToro shares are indicated to open at $59.50 from its IPO price of $52. Also, remember, Ryan Reynolds' Mountain is considering launching an IPO as soon as this week, while Cattle, a Chinese maker of EV batteries, is poised to raise at least $4 billion in Hong Kong. So it's a global revival. Let's discuss this with Bloomberg Stocks reporter Matthew Griffin. eToro, it's interesting. What a good time to IPO, because you look at a rival like Robinhood, it's up 68% on the year, but eToro is much smaller.
Yeah, I think it's one of the things that investors have on offer here is that eToro is a Robinhood rival. It's a new way to get exposure to the same kind of retail trading, crypto trading, real surge that we've seen. At the same time, they are smaller. They offer a pretty considerable discount to Robinhood. You look at what Bloomberg Intelligence has said. They trade at, or they're valued at about 5 times their sales. That's a significant discount to Robinhood, which is about well over 10 times on a forward basis.
It's a value stock in that way.
I get that. So is this a bet on the growth in kind of new finance? Crypto is a specialty of eToro, and kind of the changing of the guard here. Yesterday we saw Coinbase replacing Discover Financial in the S&P 500.
Yes, absolutely. I think it is. And eToro has gone public at what I would call just the perfect time. Right as they were on the road and preparing to go public, you had a surge in general equity markets, yes, but also a real rally in Bitcoin, in other cryptocurrencies, and in the stocks of Coinbase, Robinhood, companies that have exposure. You have that S&P addition. So I think eToro is set to ride that wave if it continues.
We have like a minute left here, Matt, but you look at CoreWeave, for an example. I want to pull it up year to date because you've been pointing out it's been doing so well. It reports earnings after market today. Private equity-backed company doing this well. Does it bode well for a broader IPO revival, given that it's those private equity companies that are stuck in the pipeline?
I think it does. I mean, it's hard to know where we go from here. I think the interesting thing is you've had companies go public. CoreWeave, since the big tariff swings, you've had eToro, you've had some insurers. These are, with eToro, with the insurers, these are companies whose revenue does not depend on selling physical goods, so not tariff dependent. But that could really help open up the market here. And with tariffs being cut now with the US and China, I think we're potentially in a good place for a broadening of this revival.
All right, we just saw the trade since it went public, 60%, the gain on CoreWeave. I've been trying to pin that down all day. Matt, great to have you on the program. Thanks so much for joining us. Matt Griffin there covering these IPOs for us in our Wall Street Beat. Let's get a check on the markets as we head to 10:30. Right now, the S&P 500 hovering in the positive, really unchanged at 58.90. Coming up, more than 1 million people a year are skipping connections. We'll talk about skip lagged. are facing a lot of headwinds these days, from falling consumer confidence and higher costs to air traffic control issues that we're all too familiar with here in New York. Now the industry has another problem on the horizon. The upstart website Skiplagged. It's a controversial site that uncovers airfare hacks like skipping the last leg of a flight in order to get a cheaper price. It's counterintuitive, but it often works. Joining us now is Akhtar Zaman, Skiplagged CEO. Akhtar, great to have you in the studio on the program. So, talk to us first about this idea that I could fly, say, to Atlanta through Detroit and pay more than I would for just a flight to Atlanta. Why is that?
It has to do with how airlines price tickets.
Yeah.
You would think it's by distance, like the further you travel, the more fuel you're using. But no, it's based on market. Airlines price by the market, so like depending on which market you buy, it could actually be a different price. They often charge more for direct flights compared to longer flights. So you have this opportunity called hidden city.
You know, travelers have been feeling crunch. They've been feeling crunch for years, but obviously everyone wanted to go back and fly. But right now, obviously that extra mile is painful when it comes to the pocketbook. How much are you seeing adoption on the site right now?
Quite a bit. Usually when there's tough economic times, we see more usage. And that makes sense because we help consumers save a lot of money, on average 50% on their ticket, which is about $180.
So why do airlines care so much? Like if I book a Detroit-Atlanta flight and just stay in Detroit and skip the second leg of the tour, why do they care? Why bother?
They care because here is a very clear case of consumers winning. Skiplag is very pro-consumer, and that makes consumers love us, but it's the same reason why airlines hate us. Just people are saving money.
You know, we are very in tune to the infrastructure issues when it comes to airports outside of New York City, what's happening with Newark.
Shanali's from New Jersey.
Oh my God. I mean, just flying back Monday, right? Whether it is staffing or whether it is weather, it is a nightmare to fly, let's be honest. And so if you're dealing with all these changes among airports when it comes to staffing levels, it actually kind of difficult for Skiplag a little bit in some ways because flights have been changing so drastically within the matter of an hour, frankly.
Well, you would think so, but like we've been in the business for over a decade. The success rate of skiplagging, which is just like missing flights to save money, is over 99.7%. So like it's a very valuable thing for consumers even these days.
What are the best deals that you can get? You know, if I want to get to San Francisco, should I book a flight to Tokyo? If I want to get to London, should I book a flight to Berlin? Like, what are the best deals that you see?
So whatever is the best changes every few minutes, and your way of figuring out what's best is to just go on our site and search like you would anywhere else.
But what are the biggest wins that you found recently? Or do you have someone coming up to you saying, man, I just booked a flight to Miami and I really only wanted to get to Savannah and I saved, you know, $300?
Yeah, we have seen crazy savings, thousands of dollars, with families booking for like 5+ people. It really like it shines for last-minute tickets because that's where airlines are trying to charge consumers the most.
Okay, so we're in the middle of May. People are probably looking to June, July, maybe August. What is your advice to people who are looking into the summer travel season?
To shop around, like knowing your options. It's such a fragmented industry that like no one platform will get you the best price. But I would, of course, recommend checking out our website because we are trying to be as transparent as possible and giving you the options. Like we want you to get from A to B as much as you do.
All right, skiplag.com is the website. Akhtar Zaman is the CEO and founder. Thanks so much for joining us, Akhtar. Let's get a quick check of what's going on in the markets right now. We've seen very little change on the S&P today, but it's been hovering above the zero level. So right now, 58.89, and we bounced up over 5,900 for a moment. The U.S. 10-year yield coming up almost 3 basis points now, just to the brink of the danger zone, right? 449.46.
4.5% is the new kind of status, and obviously the tax talks are going on. We'll talk more about that. Before that, we're going to get a look at stocks moving under the hood this hour. We're going to bring in Bloomberg equities reporter Alex Semenova. What you taking a look at?
Hey guys, a lot going on today. I'm taking a look at American Eagle. That company is taking a spill today after withdrawing its guidance like a lot of companies have this earnings season. They cited a challenging quarter that was marred by discounting and a write-down of inventory. They said that comparable sales are expected to be down about 3% and revenue is expected to be about $1.1 billion. That is down 5% from a year earlier. And the company not really casting any blame here, not citing tariffs, just citing macroeconomic uncertainty after a challenging first quarter for the company. Their CEO said that they're clearly disappointed in their execution. They said that their merchandising strategies did not drive the results that they anticipated.
KKR, you're going to tell us about KKR, but it's funny because I have the person who knows the most about KKR in the whole building to my left.
There's an upgrade, right?
Yeah, they got an upgrade from Morgan Stanley today to overweight from equal weight. They said that they recommended it as a way to play the capital markets recovery that many people anticipate. They also said that it represents an attractive entry point right now because it's actually been underperforming a lot of other alternative sector companies. They raised their price target to $150 from $120. It closed at about $127 yesterday.
It's about 129 right now, looking at a nearly 13% drop on the year. All these firms have been down, but it's interesting. Great story on the Bloomberg terminal today that shows you that now people are all excited about private credit again because things are kind of tough out there and private credit would then step in. It was tough for a while for Boeing. They have been an absolute darling this year. They are an absolute darling today.
Yeah, they're up 17% this year.
Really experiencing a nice comeback. And of course, they just won an order from Qatar Airways amid a flurry of deals coming between the Gulf nations and the U.S. during the president's visit. The agreement is for the 160 aircraft. According to the White House, they said that this is the largest order in the company's history. And the commitment is obviously a big win right now, which is coming at a time when there are a lot of delays by Boeing for the Air Force One presidential jets.
By the way, you ever skip the last leg of a trip, Alex, to get a cheaper ticket?
I don't, but I might have to consider it.
I actually forgot to ask Akhtar. Apparently, sometimes the airlines will ban you as a traveler if you pull that on them.
Really?
I got to find out if that's legal because they're worried, right? They want to be able to keep track of you wherever you are. So
Fascinating.
I'll try it and see if I get banned.
Right,
Let us know how that
you go
works out,
first,
Matt.
right? We'll follow you into that.
Alex Semenova, thanks very much for running through the stocks on the move with us this morning. Coming up, Morgan Stanley portfolio manager Caterina Simonetti joins us, and she'll tell us why she's remaining cautious even amidst this rally. Not today, obviously, but what we've seen since the bottom. This is Bloomberg Open Interest.
Now, two of Wall Street's major trading desks are making the same bold call as U.S. stocks see trade tensions easing and finally get some buyers. They are piling into the biggest losers, though, for quick short-term profits. This is at least according to Citigroup and J.P. Morgan, who are bullish over the next few weeks on small caps, technology, hardware, and home builders, all of which have lagged the broader index and are yet to see a more significant rebound. Joining us now, Caterina Simonetti, Morgan Stanley Private Wealth Advisor and Senior Portfolio Manager. What do you make of this call? Do you start to buy the laggards?
Well, we absolutely should take advantage of the market opportunities, especially since we saw such an incredible move in the market over the month of April. I mean, this is when you think about the experience that investors have been having over the last couple of years, where S&P returned over 25%, both in 23 and 24. Investors got numbed to some extent to the risks of the market and are expecting this higher than average level of returns. So when we see the decline, like we saw in the month of April, we have to make two conclusions. We have to do two things. One is consider whether we are investing appropriately, both from the perspective of income and asset allocation. And on the other side of it, we of course have to be opportunistic and see these incredible buying opportunities, both in defensive areas and also in growth areas that this market presents.
Do you think there are incredible buying opportunities right now, Caterina? I mean, back up at 5,900, back up at valuations that are, at least in large cap stocks, higher than the historical average?
Well, Matt, there are always sectors, first of all, that are just generally tends to be a little bit less sensitive to the possibility of economic recession. And while we certainly are more bullish and the chances of the recession declined significantly over the last couple of weeks, we're still not out of the woods. So areas like energy, utilities, absolutely present buying opportunities no matter what happens in the market, because they seem to be profit driven, they pay good dividends and resilient to economic environment. But we also cannot discount the tech, because the changes that we are seeing with AI, with the potential for profitability across the sectors, the changes that AI is going to bring to healthcare, to fintech, to industrials are just absolutely incredible. And that's why when we look at technology, again, like when we look at the volatility in the month of April, number of the tech companies held up pretty well. So when we look at the earnings revisions, at the forward-looking positioning of the company in terms of profitability, absolutely, we think there are companies that present buying opportunities. This is a stock picker's market, and this is a chance for us to pick these stocks up at the prices that are just relatively low in comparison to where they could be.
Caterina, what is the hedge? I guess I've been whining for the last couple of days about. I'm sorry about the scratch.
That's right. You want to take a sip of your?
I'll take a sip of my water, but.
Yeah. What's
the hedge? That's my question.
Yes, what is the hedge, and how expensive is the hedge right now, Caterina?
So if nothing, this breather in the market, the month of April, has been a bit of a wake-up call for a lot of long-term investors, especially investors that are near retirement. So there are two things that we can do. One is, of course, increase the positioning in fixed income, because we still have the benefits of high rates. And again, when we look back historically, we have not seen rates at these levels for over 20 years. So going into high-quality fixed income is an absolute hedge. On the other side of it, we see a lot of concentration as a result of this Max 7 phenomenon. Their portfolios, many of them are lump-sided with higher than normal holdings, both in individual equities and individual sectors. And this is a perfect opportunity to rebalance, go into quality, also gradual buying into this market amidst the volatility. That's a perfect hedge to this, they take advantage of the volatility, but also de-risk the portfolios, which we absolutely must do in order to get, through these times and of uncertainty.
By the way, Caterina, you talk about investors being numb to the volatility. I'm wondering, are you talking about all investors? Are you focused on retail investors or institutional as well? And B, do we all expect some kind of put, if not a Fed put, then a Trump put?
Well, with the investors certainly have different outlook versus traders. So when we look at the longer term horizon, individual investors, they are numb to the volatility because they're thinking, well, market is going to come back probably, and seeing the recovery from the month of April kind of just justifies this. But it's not a good reason to stay not invested properly. You know, we should almost mentally go back to the April and say, this decline, was I okay with it? Should I make some changes now? Versus trader mentality, which is very strategic, opportunistic. What can I pick up right now? Valuations, looking at the earnings revisions, looking at this idiosyncrasies in the market, and buying opportunities that this market presents amidst both the tariff policy, tax policy, and absolutely Fed right now, after this pause in the tariff policy, is going to be more inclined to cut rates and stimulate the economy further.
Katerina, I guess I'm pretty stunned, actually, that you're not seeing actually a bigger bid in some of those big tech names in the Magnificent Seven. NVIDIA is still negative on the year, and the Trump administration couldn't be clearer that they would run around the entire world to strike deals to protect this industry. Do you not feel this way about it?
Yes.
Yeah. I think that we have to go into trades like this with eyes wide open. We have to extend our time horizon, because absolutely the role in the profitability of stocks like that play a big role in the AI sector can absolutely not be discounted. And again, it's going to merge into other industries. And as we expand into our international trade, there is absolutely profitability opportunities, buying opportunities. And with the tailwinds from the government, this is going to go even farther. So we see buying opportunities. We just tell investors to proceed cautiously.
All right, Katerina, thanks very much for joining us. Katerina Simonetti there of Morgan Stanley, talking about the risks inherent really in investing, not just in these markets, but at all. Coming up, Speaker Mike Johnson is expecting a deal on the SALT deduction cap today, or at least before July 4th. We'll have the latest from Washington, D.C. This is Open Interest.
There is some wiggle room. How much wiggle room, that's what we need to determine. But at the end of the day, I think both sides will come together to get this done for the American people. Because what we'll see if we don't get this tax bill done will be gravely worse than what we're experiencing now with the SALT cap for all Americans.
That was Representative Lisa McClain, chair of the House GOP conference on balance of power yesterday, addressing the ongoing negotiations over the state and local tax deductions that were a cornerstone of our tax code for over 100 years. Speaker of the House, Mike Johnson, says that a deal on SALT, the cap that Trump put in 2017, likely will come today. But he said that yesterday, and maybe today he feels differently. Let's bring in Kayleigh Lines, anchor of Balance of Power, to figure that out. Kayleigh, House Majority Leader Steve Scalise says at least it'll be done before July 4th. What do you think?
Well, certainly the House Republican leadership is still trying to sound optimistic on the timelines here, Matt. They want the bill on President Trump's desk by July 4th, to be clear. They're hoping it will pass out of the House and head to the Senate by Memorial Day. But the SALT cap remains one of these outstanding issues that is a barrier to getting that done. The House Ways and Means Committee, after a marathon overnight markup that lasted more than 16 hours, did pass on party lines this tax package out of committee, but did so without having figured out what the SALT cap could be raised to that will pacify those SALT caucus Republicans from states like New York who do not think the current $30,000 level in this bill is high enough. And that is what the Speaker is now directly negotiating with these members over. Keeping in mind, of course, that they do have a great deal of leverage because only 3 votes can afford to be lost in the House of Representatives with this very narrow Republican majority. And they also argue that accepting any cap is actually them making a concession, because if these tax cuts from the 2017 Act were not to be extended, there would be no cap on the state and local tax deduction. The other thing we have to consider here, though, is whatever number they ultimately come to in the House, whenever that happens, if it can get through on the House floor, it then goes to the Senate. And there are no Republican senators from blue states. The House is unique in that sense. So there may be Republican senators who are looking to take down not only a lifted SALT cap, but other elements of the Republicans in the House measures as well, including the rollback of clean energy credits, for example, from the Inflation Reduction Act, potentially looking at narrowing the scope of cuts to Medicaid. And all of that could complicate the efforts to getting this whole thing done and through both chambers of Congress by the 4th of July.
Kayleigh, why do we hear from, just now we heard from McClain and we hear from Rick on your show all the time that if the TCJA isn't extended, it's going to be horrendous for all Americans. But that's just not true at all. If the TCJA isn't extended, we get no cap on state and local deduction. We get a jump in the amount of mortgage interest you can write off. We get personal deductions for, dependents for every member of your family. I mean, for thousands, if not millions of American working class American families, it would be much better without the TCJA.
Well, likely what all of those individuals and President Trump, mind you, who argues if this doesn't pass, it will be the largest tax hike in American history, would say you have to look at the other parts of the country as well that don't necessarily have the concentrations of wealth that the coast do in states like California and New York. Looking at potentially an income bracket, say, at the highest level, moving at a tax rate higher than 37%, which happened in 2017. That's the level where it was set. And this bill, of course, does not do what President Trump had floated, raising that threshold to 39.6%. So obviously, depending on your location, what constituency you are representing, you may feel differently about this. But the wide messaging you are getting across the Republican Party from the halls of Congress all the way to 1600 Pennsylvania Avenue, and the messaging you're getting at the White House is that there would be greater economic consequence if the tax cuts were not extended than those who might benefit from the SALT cap going away in states like New York. All of that said, of course, this is why it fits into the president's economic messaging as well, as he tries to explain that tax cuts are part of this policy, not just the inaction around tariffs, which potentially, of course, have detrimental economic effect with inflation and growth. He says this is key to kind of balancing the scales.
I do want to have you comment for a moment here on what's happening with the universities in this tax bill as well, because you have the Trump administration versus elite universities, Harvard and Columbia, for example, but you also have Harvard, Yale, Stanford, Princeton, MIT facing a higher levy here, but also colleges that are not as wealthy facing rises too. What kind of pressure is that going to put on endowments?
Well, it could potentially put great pressure on them, Shonali. You're right. There are institutions that are feeling direct retaliation from the Trump administration, which, in fact, yesterday froze another $450 million in grants to Harvard specifically. But the lifting of the endowment tax here is really substantial, from a rate that was quite marginal in the single digits to now as high as 21% that these universities with large endowments are going to have to pay. And that could have drastic impact on their finances, on the financing specifically of research, where a lot of things like health research emanate from these institutions. institutions, but that is one of the pay-fors Republicans are looking at here, knowing that there was only so much they could actually do in terms of adding to the deficit and trying to cut spending as well. It's all about trying to make the math work, but universities may feel the pinch as a result.
All right, Kayleigh, thanks very much. Kayleigh Lines there, co-host of Balance of Power. You can catch her program at 1 p.m. and 5 p.m. right here on Bloomberg Television and Radio. Coming up tomorrow, Stuart Kaiser joins us from Citi, as well as Liz Ann Saunders of Charles Schwab and King Street founder Brian Higgins.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from San Francisco, this is Bloomberg Technology. Coming up, the Trump administration moves to rescind the AI diffusion rule launched by President Biden, looking to draft its own approach. Plus, the US is clearing a path for Saudi Arabia and the UAE to pursue their AI ambitions, with Nvidia and AMD winning multi-billion-dollar deals in the region. And a ban on supersonic commercial flights over US land could soon be history. Let's get to financial markets, the technology sector, and AI infrastructure. These are the big movers to the upside. We talked about in the last 24 hours the deals that NVIDIA and AMD won to sell their cutting-edge processors or AI accelerators to Saudi Arabia. Note the outperformance of AMD, up around 5%. They also are doing a $6 billion additional share buyback. They already had $4 billion of buyback outstanding. Supermicro with its own $20 billion deal for data center infrastructure in the kingdom. Then there's the rethink on rules about technology export controls to the Gulf and other nations. The US has formally moved to rescind the AI diffusion rule and made it clear it would no longer be enforced while the bureaucratic process of revoking the rule unfolds. Bloomberg's Mike Shepard joins us now for more. We're making progress towards a place where America's biggest technology companies can sell that tech into regions like the Gulf, but China's an outstanding question.
Yeah, China is the outstanding question, and we're getting no signal from the Trump administration that there will be any relaxation of restrictions when it comes to China, especially not in the wake of DeepSeek's breakthrough. We did see just about a month ago the Trump administration moved to bar NVIDIA from selling its H20 chip to China. This is a device that was designed for the Chinese market, and that is out of concern that the startups in China could use this chip as part of the inference model that could achieve AI breakthroughs. And the same thing applies to AMD's MI308 chip. So we are not seeing any relaxation of standards there. And while the administration is moving away from the AI diffusion rule, which set up, as you remember, Ed, these three broad tiers of countries governing their ability and their access to buy AI chips from AMD and from NVIDIA especially, they are replacing it with something else. And this will be, we expect, a more bilateral approach, that each nation would forge its own agreement with the U.S. and achieve some sort of security understanding whereby China would be prevented from acquiring the technology either physically or perhaps via the cloud. They would need to show security arrangements and standards before they'd be able to get through the door and acquire those chips, Ed.
The state of play of the last 24 hours is NVIDIA, the most important U.S. technology company right now, has a deal with Saudi Arabia. AMD has a deal with Saudi Arabia. But in terms of what comes next, you alluded to it, we expect bilateral agreements between the United States, Saudi Arabia, and potentially the UAE at a nation-to-nation level.
Well, that's right. And we were expecting to see some of that even during this trip. The president is still in the region. He has left Riyadh. He's in Qatar right now, accepting the perhaps new Air Force One that we've heard about so much this week. And then his next stop will be in the United Arab Emirates. And they also have a huge stake in the AI game. And they have, like Saudi Arabia, big ambitions in this area. Their G42 company is really looking to leave a mark in the region. And one deal that our colleague Mackenzie Hawkins broke the news on would be perhaps allowing G42 to buy hundreds of thousands of these AI processors from NVIDIA over the next several years. And that would be a key breakthrough for the company and for the Emirate, which has these ambitions of expanding into AI and into advanced technology as a way of diversifying its economy. It's really critical for them to expand beyond just oil and gas that has made them so rich over the years.
Bloomberg's Michael Shepard out of Washington, D.C. Thank you very much. Let's get more on the market reaction. Bank of America came out saying that NVIDIA and AMD have a multi-billion-dollar opportunity related to AI infrastructure projects, specifically in Saudi Arabia. And there's a lot of bullishness out there about the prospects of the deals announced in the last 24 hours. Nancy Tengler is CEO and CIO of Laffer Tengler Investments, and those were deals between American companies, leading American technology companies, and that Gulf nation of Saudi Arabia. As an investor, how did you react and respond to that news?
Well, thanks for having me, Ed. I mean, of course, it's optimistic rhetoric and potentially super beneficial to the ultimate earnings of the companies. We need to see when these investments come in, and the timing and the volume. But I think just on an overall basis, what it does is it replaces the lost revenue from China. And it may not dollar for dollar, but it does psychologically. And so we were in buying these names. I've been on with you many times. We were buying in January, February, and March, not just NVIDIA, but a number of the software-related companies around AI, and then, of course, Tesla. And I think that's a lesson to everyone that this trade is not over. Wall Street tends to be very short-term focused. Investors like me tend to be longer-term focused. And what we learned yesterday is confirmation that we're early innings in this AI build-out, and it is potentially the fourth industrial revolution.
Right.
And it is similar to what we saw in the 90s in terms of productivity enhancements.
Nancy, stay with us and bear with me. We have some news crossing the Bloomberg terminal. eToro Group's US shares are indicated to open at $63.50 each. This is pending trading on an IPO that priced at $52 a share. So priced at $52, but indicated to open at $63.50. The marketed range was 46 to 50. eToro, basically a rival to Robinhood, the trading and investment platform, Israel-based company. And this is a IPO that would give the company, at its $52 IPO price, a market cap of about $4.3 billion. Nancy Tengler, while you're with us, I see some green shoots. Is that one way to put it in this US IPO market?
Yeah, I do think you're right, Ed. I mean, this one makes me just a little bit nervous because it's piling on to day trading, I think, in many regards. However, I love seeing the retail investor engaged, in fact, much more so than the institutional investor. And I do think that we'll continue to see acquisitions, M&A in general. We just launched a mid-cap strategy for that very reason. So I do think this is bullish for the economy and the overall market, and I commend them on their day one of trading.
Let's get back to the big story, which I think is AI infrastructure and the relationship between the United States and the Gulf. What we're trying to understand is what happens next. Our colleagues at Bloomberg Intelligence did the analysis on how much revenue NVIDIA and AMD will derive from that Gulf region. So $10 to $15 billion in annual sales for NVIDIA through 2027, just $1 to $2 billion for AMD in the same region. But here's the key bit. Cushioning the blow from unchanged China export curbs. We opened this program saying that the diffusion rule has been rescinded, but a new specific Trump-era rule will come. How do you think they will approach China?
Yeah, I do think that is the good news in all of this. As I said earlier, the difficulty for investors in NVIDIA was what were they going to do if China was taken off the table as a potential customer. So I still think we'll see chips sold to China. The question is in what form, and then the question is how much does NVIDIA and AMD need that revenue if they're opening up, if they have opened up new markets for distribution. So I think what the Trump administration has done is isolate certain adversaries, so think Iran, Russia, China, by going on this goodwill trip to the Middle East.
Let me show you a chart. And this chart shows that as of today's market open, NVIDIA jumped above Apple as the world's second most valuable company. Microsoft remains in place as the world's most valuable company. Given everything that we've discussed and the events of the last 24 hours, where do you need to be right now, Nancy? In the infrastructure play or in the software hyperscaler play with Microsoft?
So I do think at the margin you want to be adding to the software play, which is, we added to NVIDIA twice this year, but we also added to Microsoft and Palantir, and then some of the cyber names, Oracle as well on the software side. So I think that is going to be the next stage of build out, and we took the proceeds from names like Dell that we felt like had a nice run, and on a valuation basis relative to growth and margins was probably mostly worked out. It's, that's been a good call so far. But I think you want to, if you have to pick, I think you want to pick software over hardware.
Nancy Tengler of Laffer Tengler Investments, thank you very much. Now, coming up on the show, Tencent weathers the global tariff turmoil, posting a revenue jump of 13%. We're going to go to China and talk about that company next. This is Bloomberg Technology. Tencent saw revenue grow at its fastest pace since 2021, posting a 13% jump in sales to $25 billion in the March quarter. The results giving confidence to investors that China's most valuable company could weather a potential global downturn in 2025. For more, Bloomberg's Henry Wren joins us. And Henry, I mean, what are the main factors that drive growth in Tencent's business right now?
Yeah, two growth engines to mention. One, the most important one is the domestic gaming business, and that has been the key driver for the quarter. And the company said that its evergreen games, such as Honor of Kings, has registered record high levels of gross receipts in the quarter, and that has been the most important driver. And some newer games also shine as well. For example, the 2024 released game called Delta Force also has become one of the most played games in China. Another driver has been about the advertising revenue, which grew by about 20% in the first quarter, and that's down to the WeChat app, the short form video platform embedded in WeChat that has impressed as well.
This is a company that's heavily investing in AI research and ways to monetize, to create products with AI. What do we learn about that?
Yeah, a lot of focus, as you can imagine, probably on the analyst call is about, what's your plan about AI investment and how do you look about the recent ban on restrictions on AI chips in China. And the company gave a very long but pretty honest answer in terms of restrictions. And first, in terms of investments, the company is still investing hard in terms of CapEx. We are talking about the company doubling its CapEx versus a year earlier, although easing of slightly from the 4Q levels. But in terms of restrictions, the company said, well, in terms of the key businesses, for example, the promotion of advertising as well as the gaming business, the current backlog of AI chips is probably enough. But in terms of AI training, the company needs more powerful AI chips, the more powerful cluster of chips. However, the focus for now is to improve on the software side, given the restraint.
Bloomberg's Henry Wren on all things Tencent. Thank you very much. Another story we're tracking, no-fee banking startup Chime filed publicly for an IPO, resuming plans it had placed on pause when Trump's tariff plans ruled markets last month. It's the latest company fast-tracking its public offering prospects. More on the IPO outlook. Bloomberg's Katie Roof joins us. And Katie, we're tracking so many names at once now, which is interesting of itself. Tell me about Chime, what we know about this, the mechanism at which they want to go to market.
Yeah, so we saw Chime's IPO filing yesterday. They're the no-fee bank that was valued at $25 billion in the 2021 boom. They've raised a lot of money from many different investors, including Menlo Ventures and Iconic. They usually, when there's a filing, you want to go public a couple weeks after you start your roadshow, so usually within a month, although recently the tariffs had delayed several of the ones that had filings flip public. But, we're starting to see IPOs again with eToro.
With eToro, if you're just joining the program, just before we came on air, eToro's U.S. shares were indicated to open, Katie, at $63.50 each. $63.50 each. The IPO priced at $52. We're waiting for that start of trading. eToro is an interesting one. Israel-based trading platform, kind of a rival to Robinhood. Tell me about this IPO.
Sure. Well, it was a long time coming, not just, with IPOs getting delayed repeatedly the last few years, but also this is a startup that's been around for more than 15 years. And, they're finally going through with their IPO. If you look at a comp, Robinhood's been surging year to date. So it actually makes a lot of sense that eToro would want to go public in a market like this.
Bloomberg's Katie Roof on all things IPO. Thank you very much. Now, coming up on Bloomberg Technology, we're going to hear from the Twilio CEO, Cosima Shipchandler, as the company kicks off its Signal Developers Conference back in person for the first time since 2019. This is Bloomberg Technology. I caught up with Twilio CEO Cosima Shipchandler as the company's bringing back its Signal Developers Conference to San Francisco in person for the first time since 2019. And that kicks off today. And as a part of that, they announced a new multi-year partnership with Microsoft.
So with respect to Microsoft, we announced a multi-year strategic partnership. Obviously, they're an incredible brand, that they've got great enterprise scale. We really view it as two great companies coming together to be able to deliver on the vision that we've laid out. In particular, we're going to use them for their amazing AI technology. I think they've done some really interesting things with respect to Azure AI workloads. Again, we're going to bring that together with our contextual data capabilities, plus our communications, all in one platform. I think importantly, we're increasingly going to market as an infrastructure layer, one that unlocks the customer experience layer of the internet, if you will. And I think Microsoft's going to be a big part of that story.
So do we view this as kind of a sales channel move? There's an argument that working with Microsoft in this way on a shared common platform helps Twilio go after a much larger addressable market in which it hasn't historically played.
I think that's definitely a possibility as time goes on, but we're really starting from the foundations as a technology partnership. We both pride ourselves on delivering technologies for builders. As I mentioned a moment ago, Builder is very much in the ethos of the company. Their technology conference, which is in a week, is labeled Build. And so I think that just fits nicely together. And I think we'll see how things go there. We're very proud of some of the abilities that we're launching together. And I think it does open the door for commercial relationship down the road.
That was Twilio CEO Cosima Shipchandler. From partnerships to team sports, that's what venture capital has always been a bit of. But now we're seeing the rise of the solo general partner, where just one person raises the money and makes investing decisions. Joshua Browder is one such solo GP. His firm Browder Capital just announced a $30 million raise for its fourth fund. Joshua is with me in the studio, and those watching probably know you best as the CEO of Do Not Pay, which, short description, is an AI-powered lawyer chatbot that originally helps you get out of parking tickets. Why do you want to raise that much money and invest it on your own without any partners?
So I specialize in backing young founders. I'm an investor in more Teal Fellows than anyone else. And I think young, undiscovered talent is really a great investment opportunity. I was lucky to be the first investor in a company called Owner, which yesterday announced around a $1 billion valuation.
Right, so you took them from basically pre-seed when you made your investment to unicorn status. So you're now saying you think you can do this?
I think that everyone is chasing hype, but young founders are really the future, and I love undiscovered people that everyone is passing on. And I go all in. I have one staying with me right now in my apartment. I put their...
What do you mean by that? So you've invited someone you've invested in, you've given them a home?
Yeah, give them a home, give them their first check, and really put them on the circuit. And I love to relive my own founder journey. And founders love working with other founders.
So the core question here is, why is that more beneficial to the founder than them taking a check from one of the giant firms?
They're not even ready to take one from the giant firms.
Right.
I catch them on day one, and everyone is chasing hype. I think the way to win is actually create your own hype and create your own winners.
It's interesting where you raise the money from. So one of the anchors of Fund 4 is Sequoia, a very large firm. We will have a partner from Sequoia on later in the program. But Mark Andreessen also contributed to the fund personally with his own money. Why might he do that?
I think he has a tradition of putting first fund managers in business, and this is my first institutional fund. I should mention he's also the first investor in Do Not Pay.
But he did that through Andreessen Horowitz, his giant firm. So now he's giving money to you personally out of his own pocket because he feels that you can, get to founders earlier than Andreessen Horowitz can at this stage?
I would just say it's about helping the ecosystem.
What's the strategy here? What kind of size checks will you write? What cadence of deals do you want to do? Because we're talking early stage.
So there's so much noise right now. People are doing dozens or even hundreds of deals a year. I want to take the opposite approach. I take one person every month or every other month and go all in for them. And that can be a $200K check, and it can be as high as $1 million.
Is it like more akin to an incubator than it is to sort of traditional seed, Series A, Series B round?
It's really up to the founder to build their business, but it's almost like an incubator. I feel like I'm a railroad conductor putting them on the right track.
You also have a job at Do Not Pay. How are you going to manage that? Leading your own startup as well as backing others, finding the next Do Not Pay.
Founders really love to work with other founders, and I think it's an unfair advantage being a founder and an investor. No one likes to work with a money manager or a professional investor, and because I can give that founder energy and share solutions to problems that I've overcome, founders really appreciate that.
What are the learnings you're taking from the Do Not Pay story and how you want to approach this? Like I recall a story where you had breakfast with Mark Andreessen in 2016, and at that time, Do Not Pay was going to be a not-for-profit, but you were convinced otherwise by him.
Yes, and the tiniest moment or strategy change can change everything, and I want to be that for my founders. I've dealt with problems that I can help them uniquely with. So, for example, how to get their app classified so that they're not paying 30% to Apple, which is something that we always deal with at Do Not Pay.
Joshua Browder, CEO of Do Not Pay, plus the solo GP and founder of Browder Capital. Thank you very much. Now, coming up on Bloomberg Technology, we're going to talk more about what these deals in the Gulf mean for AI development with someone who's been investing in AI for a decade, Sequoia's Konstantin Bühler. He joins us next. This is Bloomberg Technology.
Apple is investing $500 billion. NVIDIA is investing, and I see my friend is here, Jensen. That's very good, wherever you may be. Thank you very much, because he's putting in $500 billion. TSMC is investing $200 billion, and with this trip, we're adding over $1 trillion more in terms of investment.
Welcome back to Bloomberg Technology. I'm Ed Ludlow in San Francisco, and that was President Trump there in Riyadh yesterday, talking up all of the deals that have taken place in the last 24 hours, largely in AI infrastructure. When it comes to financial markets, there's like a bit of fatigue out there, although up basically half a percentage point, the NASDAQ 100 is outperforming other major indices. What the president also said on Air Force One last night is that he wants America to lead in both the theaters of AI and crypto, although Bitcoin under a bit of pressure, 103,000 or so US dollars per token. These are the single names that we're really focused on in tech stocks right now, and they are principally the chip makers. NVIDIA and AMD both securing multi-year, multi-billion-dollar deals to ship their latest generation AI accelerators to the Kingdom of Saudi Arabia. And Bloomberg also reporting, citing sources, that a deal with the UAE is coming as well. Bloomberg's Anne-Marie Horden is in the Gulf and has been following the latest on President Donald Trump's visit to the Middle East and joins us now. AMH, the centerpiece of all of this is the deal between two leading, or maybe more than two leading, American technology companies and their access to markets in the Gulf.
Yeah, absolutely, Ed. This is really one of the standout pillars of the president's trip, and it's transformational for a lot of these Gulf countries, which traditionally have relied upon their influence, their wealth being from natural resources, to now they're thinking about the future. And to have that future, to have AI data centers, they need to get their hands on advanced semiconductors. And you know, as well as anyone else under the Biden administration, there was frustration with these geopolitical swing states on getting access to those advanced technologies. There was something called the diffusion rule. The Trump administration decided they were going to cancel it. And I actually quickly had a conversation with Jensen Huang last night as he was walking into this honorary dinner with the president in Riyadh. And I said, what do you think? They rescinded the diffusion rule. And he looked at me and said, rescinded? Canceled? AMD, NVIDIA are elated about this new marketplace they can come to when it comes to advanced technology. But Ed, you know, there is still this China question that is looming over all of these deals.
Right. The business in the Gulf, Jensen can take potentially like market opportunity lost in China and make much of it back in the Gulf based on the research I've seen this morning. The business of geopolitics, those outstanding questions on China, and there are more deals to be done between the United States and the nations that the president's visiting. What happens next, AMH?
Yeah, he's going to go to UAE, and we have a report that potentially the UAE is going to buy 100 million of NVIDIA's high-tech, these advanced semiconductor chips. No surprise in the sense that Sheikh Tahnoun was in the White House just a few weeks ago, and he then left, and the UAE announced $1.4 trillion of investment they would like to make. But an asterisk, a part of that deal, of course, is that to make that kind of investment, they need access to these chips. But Ed, you talk about NVIDIA and this potential new market share they can get in the Gulf. When I talk about China, though, and the conversations that are happening in the region, especially these bilateral conversations, and probably some of these conversations still to be had because they're working this out, is that if these countries get access to these chips, how do they make sure the tech does not leak to China? That is still a national security concern that has bipartisan support in Washington, D.C. These Gulf states want to work with the United States to make sure they can do that. But potentially you can see almost these AI data centers hubs where they're on these lands, whether it's in the United Arab Emirates or whether it's in the Kingdom of Saudi Arabia. But the U.S., and this is a story I had reporting on, but the U.S. would control the access to that tech because they want to make sure that that technology does not get into the hands of Beijing.
The U.S. controlling access to the technology. Bloomberg's Anne-Marie Horden in Doha, Qatar. Thank you very much. Let's pivot from the geopolitics of AI to the investing side and bring in someone who's been involved in the sector for a long time. Konstantin Bühler specialized in AI machine learning investments. He's a partner at Sequoia Capital, where last year, nearly 70% of the startups the firm invested in were AI companies. Let's start with just simply your reaction to the AI infrastructure deals of the last 24 hours. U.S. technology going to the Gulf and setting up data centers and AI development in that nation?
Well, thank you, Ed. It's always great to be here. And these new deals are testaments to the fact that AI, artificial intelligence, is not just a matter of corporate success, it is a matter of national imperative. It is a great sign of the importance of this industry. I think back to a decade ago, and we had concerns about the US staying ahead of AI. There are really 4 key pillars to AI strength. There's the compute, there's the power, there's the data, and there's the algorithms. Thinking back to that last wave of AI, the reason why the United States has been so far ahead is that 4th pillar, those algorithms. So as we develop new technological allies around the world for compute, for power, for data, it's really important that we stay on the absolute forefront when it comes to algorithmic advancement. We have the best researchers in the world. We have the best engineers in the world.
Okay, I'm sorry to interrupt you, Konstantin. We've got some breaking news crossing the terminal. From the White House, President Trump has secured $1.2 trillion in economic commitments in Qatar. The Qatar commitment is $1.2 trillion. According to the White House, there are economic deals worth $243.5 billion. This is something the president has announced on the ground in Doha. We were just speaking with Bloomberg's Anne-Marie Hordern, who is in Doha, Qatar, and she noted that this is what's pending. We don't have the specifics in terms of sector, in terms of companies involved, but as we get that, we'll bring it to you. And right now, we'll go back to the conversation we were having, which is there is US leadership in the field of AI infrastructure. You basically broke down the 4 categories.
Yes.
One that is increasingly crossing my desk is AI memory in the context of agentic AI. This is something that people say we need to invest in this and solve it. I personally don't have the expertise or academic grounding to understand it. Why is your industry talking about it?
You're exactly right, Ed. So there's compute, there's obviously the data, there's obviously the power and the algorithms, but another important component is memory. Because when you interface with an agent, you want it to remember you, of course, but it also has to remember itself. Think about a physician, for example. Every time they interface with a patient, an agent is going to be able to help them think back to previous interactions, not just what the patient said, not just their vitals, not just data about the patient, but over time, using tools and companies like Open Evidence, the physician's going to be able to remember exactly what the interaction was like, how to communicate to the patient, and memory is going to become more and more important.
The question is, where does all of this activity take place, right? The subject of today's Bloomberg Big Take is DeepSeek, right? And the Big Take presents the hypothesis that the company's sudden emergence last month illustrated how China's industry is thriving, irrespective of US political policy. You know, Jensen Huang told me in March, more than 50% of AI researchers are in China. When you think about the issues you've outlined, do you agree with that hypothesis presented, that China's AI industry is thriving, but also looking at the same issues that your industry is looking at here?
Well, it is true that they have amazing researchers there, but it's also true that we have some of the most creative, brilliant researchers on the planet. Here's an example. Just recently, we hosted our annual AI conference, Sequoia AI Ascent. We brought together 150 of the top minds in the industry. This is everyone from Jensen Huang and Sam Altman to the young up-and-comers. And the #1 technical topic of the conference was a concept called tool use. Tool use is all about AIs working with each other. We're teaching the computer how to use the computer. And there was fortunately a big advancement in our industry over the past few months, a new protocol called Model Context Protocol. Think about each AI agent as an expert. Think about every piece of software as an expert. Your CRM is really good at remembering your previous interactions with customers, for example. The issue is that those experts don't necessarily speak the same language. What this new protocol allows is a universal translation mechanism so that all these AI agents and all these softwares can communicate. That is pivotal to us as the United States staying ahead. We have to be working together. I'll give an example of what this protocol could do for us. We have a portfolio company called Rocks. It helps the best sellers do really great research before meeting with a potential buyer. They can not only do that research now, they use MCP to connect and actually make a pitch deck, directly on the specific needs of that user. They can even plug into Cognition or Claude Code and write an entire demo. That's how we stay ahead of the curve in AI, collaboration, and working together as researchers and engineers.
Sequoia partner Konstantin Bühler, great to have you back here on Bloomberg Technology. Thank you very much. Now, coming up, the sleep fitness startup 8 Sleep joins us to discuss its growth strategy and its new product lineup. That conversation's next. This is Bloomberg Technology. Sleep fitness startup 8 Sleep is launching an expanded suite of products today. The company makes high-tech, temperature-controlled mattress covers and systems, and it's also expanding into new markets while talking up a potential IPO. 8 Sleep CEO Matteo Franceschetti joins us from New York. This is interesting. In my world, everyone around me tracks the data so carefully, maybe through a wearable and other means in sleep. Let's start with what's new. What is the actual proprietary technology you're offering and how it helps a consumer?
Yeah, of course. We develop our latest technology. It's called Pod 5. At 8 Sleep, we develop technologies to improve your sleep performance. And Pod 5 is a modular sleep system that controls your body temperature, your elevation, and sound to maximize your sleep. It does everything based on your biometrics, so we're also able to track everything about your sleep and your health in real time, and then we adjust the environment for you to improve your night of sleep.
Are these technologies and products that a consumer can get access to via their health insurance? Are you part of a broader sort of health network or system that's a go-to-market channel for you?
Not yet. Right now, we just sell direct to consumers, but it's part of our vision. At the end of the day, we see a future where the pod will be reimbursed by insurance companies because we have hard data proving that we can improve your sleep by up to 34%.
The reason I ask is you've had incredible growth, right? Revenue is 10x since 2020, a 5-year CAGR of 60%. And those are numbers, but what is it that's driving the growth? Like, what is it geographically, the demographic of the consumer, the sales channel that's helping you?
Well, first of all, I think our results. People really love the product and they see the benefits. Some of our customers, sometimes they also use wearables and they can see the difference in their own wearables of when they use the pod or when they don't. But what is really driving our growth, which is connected to this, is word of mouth. A very large part of our revenue is just because our customers recommend the product to other people. At the same time, we keep expanding. We're right now in 30 countries, and we expect to open Asia by the end of the year.
I think you're also looking at Saudi Arabia. Given the news of the last 24 hours, how did that come about?
Yeah, right. We were so lucky. We didn't know, obviously, about that, and we are announcing Saudi Arabia today, which we expect to be a very large market. We were already in UAE, and the fact that the president and so many other key CEOs are there is amazing.
You're also evaluating China. How realistic is it from a market perspective of the end user, but also supply chain for you to go into that market?
Yeah, we expect to launch in China by the end of the year. It's a market that we know really well. We have been manufacturing in China since 2014, when I moved there to really kick off the manufacturing of 8 Sleep. And we expect to start selling in that market, as I said, before the end of the year, in Q1 at the latest.
Will you support your growth with an IPO, Matteo?
I think it's part of our strategy, absolutely. I think great hardware companies like Tesla and Apple, they all went public fairly early. I think it will give us a discipline, and it will also prove that we are here to stay. We are very ambitious about what we can do for humanity to improve their health and their sleep.
Matteo, we're running short on time, but what I really want to get to is your core competencies. Have you got brilliant software engineers, brilliant hardware engineers? What is your biggest advantage?
I mean, it's really AI, right? All our engineers, they come from the biggest companies in the world in terms of AI. We really apply AI and hardcore technologies to your sleep and your health. I think there is no other company in the world improving your sleep in the way we do with software technology and AI and hardware.
Matteo Franceschetti, CEO of 8 Sleep. Great to have you here on Bloomberg Technology. Thank you. Now, coming up, supersonic travel could be coming back to the US and soon. We speak with Boom Supersonic CEO Blake Scholl. That's next. This is Bloomberg Technology. A ban on supersonic commercial flights over U.S. land could soon be history. A bipartisan group of lawmakers are looking to lift restrictions over civil jets flying over land at supersonic speeds, potentially opening the skies to a new era of high-speed travel. At the center of that effort is Boom Supersonic, which is developing the next generation of supersonic jets. Joining us now is Boom CEO Blake Scholl. And look, this legislative pathway is absolutely critical to whether or not you're going to be able to achieve what you want to achieve. What is the path from here, and will it happen? Because without the legislation, you can't get your business off the ground, pardon the pun.
Yeah, well, hey, good morning, Ed. Thanks for having me. Yeah, no, we've had one of the dumbest regulations ever in aviation. In 1973, we put a speed limit in place over land. And what that means is we could fly supersonic from the U.S. to Europe or from U.S. to Asia, but we can't fly supersonic right here in the U.S. And with our test flights in January and February, we proved we can fly supersonic with no audible sonic boom. And I think this is just common sense. If we can fly coast-to-coast supersonic without any sonic boom that anybody hears in the ground, obviously that should be allowed.
The big political point here for those lawmakers is that your competitors pursuing this field on the technology side are in China, are they not?
Yeah, I think we really are watching a slow motion train crash here. Right now, China is shipping a 737 clone. They're working on a Boeing 787 clone. Boeing has not made an all-new airliner in over 20 years now, and China announced earlier this year they've entered the supersonic race. We still have the opportunity to maintain American leadership in aviation, but we've got to get out of our own way. We've got to cut the red tape that's been holding back progress in flight for 52 years.
Blake, this administration, the Trump administration, has been quite engaged in the field of autonomous driving, in eVTOL, for example. Have you spoken with Transport Secretary Duffy or indeed met with the president to discuss America's efforts in supersonic?
The president has a model of the Overture airliner that I think he keeps outside of the Oval Office. We've had great conversations with multiple cabinet members, including Secretary Duffy. It's really hard to find anybody who wants to continue to hold flight back. And now that we've proven that we can have supersonic flights with an audible boom, really this is something that I think everybody can be behind.
Your technology is in the design of the wings, but mostly in this engine, right? Where are you at in agreements to build the plane, the engine at commercial scale?
You know, the surprising thing about boomless cruise is it's actually a software fix. It's not about the wings or the engine exactly. It's actually about how you fly the airplane such that the boom never reaches the ground. And that's a software innovation that's actually pretty easy to deploy. And as we speak today, we've proven we can build a supersonic jet with the XB-1. We're building the first full-scale Symphony engine. That's the first independently developed supersonic jet engine. It's going to be running on a test stand around the end of the year. And we're looking forward to start building the first airliner in our factory in North Carolina next year.
What I recognize in some analogous fields like eVTOL, for example, is a pivot or shift away from consumer passenger model to looking at defense applications. Is that in Boom Supersonic's future, Blake?
Well, the factory that we're building, all the infrastructure we're building, if worse came to worse in wartime, we could pivot from building civil products to building defense products. I think that's an important sort of rebirth in the defense industrial base. However, the most important thing, I think we could do for the U.S. government is provide faster transportation for the most important people. We'd love to replace the rusty old 757s and 747s that carry around our VIPs today with airplanes that could help them arrive in half the time.
I never flew on Concorde. I kind of have this peripheral knowledge of it from when I was a kid. But I think about what XB-1 did in January, right? And that you reached Mach 1.122 at 35,000 feet. How are you going to sort of self-assess your next milestones? What are the next milestones?
Yeah, well, it's a matter of scaling up. XB1 was the first airliner that was actually built out of proven airliner technology that scales up to build a supersonic airliner, and so we're just scaling up. So next milestone is a full-scale engine around the end of this year. Next milestone after that is construction of the first full-scale airliner. That's next year. We want to roll it out in 27, fly it in 28, conduct extensive testing, and be ready for passengers by the end of 29.
Blake, before we let you go, how capital intensive is this for you, and what are your capital requirements in terms of raising new funds?
Building airplanes is certainly capital intensive, but what we've found is a small, focused team enabled with great people, AI design tools can do this about 10 times more efficiently than the big guys can. XB1 was designed, built, and flown by a team of about just 50 people with about a tenth of the capital ever used before to create a supersonic aircraft. So we will continue to need capital, but it's a shockingly small amount compared to what you would see at a Boeing or Airbus.
Boom Supersonic CEO Blake Scholl, great to have you here on Bloomberg Technology. Thank you. That does it for this edition of Bloomberg Technology. Don't forget, check out the podcast. So many of you listen to this show as a podcast. You know where to find it: on Apple, Spotify, iHeart, and of course on all the Bloomberg platforms. Big focus on AI infrastructure as the president makes his way through the Middle East. But from San Francisco, this is Bloomberg Technology.
Welcome to Bloomberg Markets. I'm Shanali Basak. Let's get a check on these markets because we have been fluctuating all morning, but the S&P 500 now higher by the tune of nearly 0.2%, and that is despite most of the sectors in the index still in the red on the day. The Nasdaq 100 getting even more of a lift, about 0.5%, but the U.S. dollar getting a reprieve. It is off of that jump we saw back on Monday, lower once again today, and the 10-year yield, the thing I've been watching most closely this week, given the tax discussions in Washington, you are seeing the 10-year yield now nearly 4.52 on the day, 5 basis points higher. Now let's highlight a couple of movers here under the hood with Bloomberg's Isabel Lee.
Hey, Shanali, first up, we have Supermicro. Shares are jumping nearly 20%, and this comes after DataVault, which is a Saudi Arabia-based center company, signed a partnership with a chip maker, and the agreement is valued at around $20 billion and should fast-track delivery of ultra-dense GPU platforms and rack systems for DataVault's hyperscale AI campuses. Next, still with developments in the Middle East, we're looking at shares of AMD and NVIDIA. You see AMD shares popping around 5%. So both companies said they will supply semiconductors to Saudi Arabian companies for a massive data center project. So Bank of America predicts the size of the projects to be likely around $15 to $20 billion with a B over a multi-year period. So again, this effort underscores the company's attempt to really broaden their customer base outside of the small group that they have right now. And last, we're looking at shares of Boeing. You see there, shares are also popping around 13%. They've been surging over the past week. And this, of course, is thanks to the plane orders connected to the trade talks. We have Beijing winning the single biggest deal in its history, and that's with Qatar Airways placing an order for at least 160 long-range jets. This is, of course, a big commercial win for Boeing, which really had a really turbulent past few years. Back to you, Shanali.
Thank you so very much, Bloomberg's Isabel Lee there with the movers. In regard to the Boeing news that she was talking about, President Trump spoke about it earlier today during his visit to Doha, where Boeing CEO Kelly Ortberg was also at.
Kelly's telling me from Boeing it's the largest order of jets in the history of Boeing. That's pretty good. That's fantastic. So that's a record, Kelly. And congratulations to Boeing. Get those planes out there. Get them out there.
And that Boeing announcement just part of many deals and declarations being made as President Trump travels through the Middle East. And Bloomberg surveillance co-anchor Anne-Marie Hordern is live right now in Doha as we hear of more deals announced in the last hour with Qatar. Now, Anne-Marie, how do you describe the scale of the relationship that's building?
Well, the scale of the relationship really is with this administration, and I would say the entire Gulf, or as I'd like to call it, the capitals that are flush with capital and investing in the right industries that the president is really welcoming. And I think it really goes to show that he's been flanked throughout this entire trip by American executives. Obviously, the highlight for this administration in Doha has been the Boeing and GOE aerospace deal when it comes to Qatar Airways. On top of that, we're also seeing an announcement of defense deals with the likes of Raytheon. So you can see the industries that these Gulf capitals are really looking into. It's jets, it's defense, and then critically, and especially for tomorrow when the president makes his way to Abu Dhabi, once again, AI and the access that the Gulf is now going to be able to get with these advanced semiconductors for the likes of AMD and NVIDIA is going to be on full display.
How do you put into context the scale of these dollars? You know, behind the scenes, I did ask a couple of executives from the outside who are thinking about investing in what is going on here, trying to work eventually alongside NVIDIA, look at the data center opportunity in the Middle East. They looked at that $600 billion number yesterday, Anne-Marie, and they said, we don't even know if we believe it, right? The scale of these numbers are so large, but how much of it is going to come to fruition?
Right, and as Saudi Arabia is working towards Vision 2030, just to take them in particular, can they do $600 billion? And the Crown Prince, Mohammed bin Salman, went on stage and said actually is going to look for $1 trillion, which is something we know that the president was hoping that he would have more of a goal towards. What I would say is this is direction of travel. It's unlikely that maybe all of these billions of dollars are going to be flowing, and there's still details of some of these deals that yet to be worked out when it comes to the likes of NVIDIA or AMD. For Saudi Arabia, the UAE, to get a hold of those advanced chips. They need to make sure and really prove to the administration that that tech is not getting into the hands of China. So potentially you're going to have a lot of these AI data centers in the Gulf, but America would play a leading role in making sure that technology is secured. But I think what you could take from all of these deals in Riyadh, in Doha, and then tomorrow in Abu Dhabi is the fact that this is the direction of travel for this administration. All paths lead to this region when it comes to deals, economic relationships, and as well as mediating big geopolitical conflicts around the world.
Bloomberg's Anne-Marie Hordern will be keeping a close eye on your trip to the Middle East. Thank you so very much for joining us today. And a closer look at markets now. We're going to be joined now by Andrew Sliman. He's a senior portfolio manager at Morgan Stanley Investment Management. And one thing I've been watching for all morning, Andrew, is to see when we would see NVIDIA in particular turn green for the year. It just happened. And so I was wondering, if you're watching much of the Mag 7 still in red territory for the year, where is that buying opportunity and why aren't people jumping in?
Well, I think NVIDIA, what is weighed on the big Mag 7 is really they're spending a lot of money this year, a lot more than they have in the past to build out AI and data centers. And the result is their incremental return on invested capital has come down because they're spending a lot more than the past. And I think they'll ultimately get a return on that investment, but that's weighing on those companies because when you think about it, U.S. exceptionalism has all to do with high ROEs that these companies have generated relative to the rest of the world because they're CapEx light, buy back stock, bolt-on acquisitions. Well, that's changing a little bit here as they are spending a lot more money than in the past. So I think that's really been the cloud overhanging these stocks, and that might last the rest of the year because I'm not sure you're going to see a real return at least for 2025.
It's interesting because the reason I brought up NVIDIA, of course, is because in the wake of Trump's trip to the Middle East, you are seeing a 3-day rise in NVIDIA to the tune of about 15% here. What about the rest of the playbook? To the extent that you are following the president's words or the Treasury Secretary's, where do you follow the money to?
Well, I think one of the things you have to think about here is that the stock market has already adjusted to a lot of this good news, right? You wind the clock back 6 weeks to early April, the market was down 18%, the VIX hit 50, and there was an expectation that things were going to be very bad, and the investors got too one-sided on the short side. And so that presented a great opportunity to be more optimistic. Today, we've gone from the old saying, the sounds of cannons to the sounds of trumpet. Everything is great. The VIX is down to 18. The market is 18% higher, and it's priced in a lot of good news. So I'm a little bit more cautious today than I was 6 weeks ago because when you get that level of panic, it usually is a much better time to buy than when everything is perceived as good news like it is today. Sorry to be a downer.
I actually am shocked. I'm shocked to hear you be a downer, Andrew, because I feel like for the last year and a half, you have been the bull in times when things have gotten tough. You totally have. And so to hear you kind of negative, to me, feels like a tone change. What do you do in this scenario if you're still feeling this cautious?
Well, yeah. So I was very optimistic 2023, 2024 because we had a 25% decline, and I saw a high level of pessimism towards equities in general. But as we came into this year, I saw a lot of, expectations, price targets for the S&P was very lofty at the beginning of the year. And we saw a lot of retail flows turned very, very positive. And that's usually symptomatic of a third year of a bull market. You get a lot more optimism because, the reality, people frame their viewpoint looking solidly in the rearview mirror. The rearview mirror wasn't a bear market anymore. It was 2 good years. The market was up 67%. So the expectations were too high. Now, the good news is some of that has been